What is going on, investors? This is Jason, aka the Frugal Investor. In this video, we will do a deep analysis of Alibaba stock. Alibaba is the darling of value investors in 2021. A lot of the big names in value investing have already built up their position in this company or are already adding it to their portfolio. Please don't forget to like and subscribe. Go ahead, like and subscribe to the channel right now before we get started. With that said, let's get right into it. Alibaba is an e-commerce giant based in China. It is a very well-diversified business with businesses that are in cloud, computing, retail commerce, wholesale commerce, national and international logistics, and transport, digital media, and entertainment. Some of their biggest entities are Taobao, Tmall, AliExpress, Alibaba.com, Alimama, and Alibaba Cloud, which is also their fastest growing entity. These businesses, they have a monopoly on the Chinese market and have a huge stronghold in the Asian markets as well. Recently, they have started building up warehouses in Europe, and they are now in competition head to head with Amazon. Most of their revenue is coming from their e-commerce transactions performed on their platform. If we look at their quarterly filings, total core commerce, which is retail commerce, retail wholesale commerce, international commerce, wholesale, local consumer services, some logistics services, that constitutes 87% of their business. Total core commerce constitutes 87%. Cloud computing constitutes the other 8%, while digital media and entertainment constitutes the rest of the 4%. So the biggest part of their business is just general transactions, just general retail e-commerce transactions. These e-commerce transactions are performed in China and outside of China. So they are doing business in China with Chinese people buying stuff and selling stuff to each other, while also international people are going to their platform and are buying stuff from China or are shipping stuff to China through their platform, which is Alibaba, and they're using AliExpress to complete those transactions. Over the past 2 years, their monthly active users have gone up from 755 million to almost 925 million. Almost close to a billion people are using their platform every month. A billion people, that is 3 times the population of United States, are using their platform every month. Such is the size of this company. The stock price is currently trading at $170.30. Over the past 5 years, it's up by almost 72%, while over the past 1 year, it's down by almost 40%. It's currently trading at a P by E ratio of 17.42 and a forward P by E ratio of less than 15. So it is available so cheap right now. And that is because of the fears surrounding the Chinese stocks, which is the attacks by the government, by the attacks delisting by the US government, while Chinese government is attacking Alibaba because of some issues with Jack Ma. Now those fears, they have completely terminated the stock price. Mr. Market is acting naive around the stock price. If we look at their top line has constantly been going up. From 2020 to 2021, their top line has almost gone up by 42%. 42% just in 1 year alone. If we look at their bottom line has almost doubled in the past 3 years alone. That is a huge jump both in the top line and in the bottom line. It shows that the business is growing really fast, and a lot of people are getting added onto their platform both nationally in China and in Asia and internationally as well. Jump in net income, which is their bottom line, from 2020 to 2021 is not that significant because their operating expenses did go up. Some of it is related to pandemic, because of which their operating expenses went up and which cut into their bottom line. The free cash flow per share is $10.67 in 2021, which went up from $7.95 in 2020. Their free cash flow went from $7.95 in 2020 per share to $10.67 in 2021 per share. Now this is a 26% jump in free cash flow per share year over year. Based on this jump, we can count their future price. Okay, so if they are jumping by 26% year over year, let's take a moderate jump of 15% for the next year and 15% for the year after that in free cash flow per share. Okay, now please excuse my language. I really don't have good handwriting on computer. So their free cash flow in 2021 is $10.67, as we can see right here. Okay, now, assuming a moderate 15% growth in the free cash flow per share, the free cash flow in 2022 will be $12.32. Okay, now free cash flow in 2023 will be $14.16. Okay, now based on this information, Let's count their price in 2022 and 2023. Okay, I'm going to delete this one. I'm going to delete this one. We are assuming a 15% moderate growth, and we are assuming that the free cash flow in 2022 is $12.32. We'll put that in the formula of P by E. Let's right now it's trading at a P by E of 17. Let's assume a moderate P by E of 18 in 2022. Okay, so P by E is 18. So price we have to find out of the stock. The earnings, let's say, are $12.32. Again, excuse my handwriting. It's like a 2-year-old writing. My handwriting is not that great. 18 into 12.332 gives us $221.76. Now that is the stock price in 2022 based on our assumption. That is the intrinsic value of the company in 2022, $221.76. Now let's count the value in 2023. Okay, so this is in 2022 based on our assumption. This will be $221.76. Now currently it's trading at $170. Okay, so we'll count the value in 2023, assuming a moderate 15% growth from 2022 to 2023. Now in the past years the growth has been more than 25%, but we are assuming a moderate 15% growth. Okay, from 2022 to 2023 gives us a free cash flow of $14.16 per share. Now using that, we will put that in the formula of P by E is equal to 18. Now 18 is the price by earnings ratio we are taking, which is also very moderate. We can take more than that. So we will take this formula. We will put the price, we will multiply 18 with 14.16, and we come up with $255 price per share. Now that is the intrinsic value of Alibaba in 2023 based on our moderate assumption, $255. Okay, $255 will be the intrinsic value in 2023. Now if we are buying it today, which is $170 a share, and in 2023 it will be $255, which is very moderate. Intrinsic value will be $255 per share in 2023. So we are getting a 25% return on our money year over year. Overall it's a 50% return from $170. Year over year we are getting a 25% return on our money based on the correct intrinsic value of the stock in 2023. While in reality the return will be much more because the revenue is going up by much more. This is just a moderate calculation taking 15% growth in revenue and a P by E of 18, but still 25% return even with moderate calculations is a great amount of return on my money. If we look at the amount of cash this business has on hand, they have about $75 billion on hand and their debt is only $28 billion. They can pay their debt 3 times over. That is how much cash they have on hand. This is a very safe position for any business to be in at the present moment. The current gross profit margin is 40%, while a sector median is only 35%. To go over a brief summary of what we went over, Alibaba is a Chinese e-commerce giant with very well diversified entities in all different sectors. Core commerce, which is simple e-commerce on their platform, constitute 87% of their business, while cloud computing constitutes the other 8% of their business, with digital media and entertainment constituting the rest of the 4% of their business. They have almost 1 billion active monthly users on their platform. This top line has gone up by almost 40% over the past 1 year, and their bottom line has also gone up by a huge amount. Based on moderate future cash flow, on moderate calculations of 15% growth year over year in their free cash flow per share, the stock price comes out to be $255 in 2023. That is a 25% cash on cash return if you buy the stock today at $170. They have $75 billion cash on hand with $28 billion worth of debt. That is, they can pay their debt 3 times over using the cash on hand, almost 3 times over. They are trading at a forward P by E ratio of less than 15 and a current P by E ratio of 17. I am not going to tell you to buy or sell this company. This is your decision. Based on my deep analysis, and I have provided you more of that right here, based on that, you make your own decision if it's a good buy or a good sell. This is Jason, aka the Frugal Investor. This was my analysis of Alibaba, a deep dive into how the business is performing, how the business has performed over the past years, the P by E ratios, the intrinsic value over the next 3 years. Leave me a like and subscribe to the channel. See you in the next one.